It's another business morning. Good morning and welcome. I'm Ladi Williams.
And I'm Chimeze Obi Iwagu. Well, we'll begin with some of the highlights of last week. The National Bureau of Statistics released the capital importation data, which showed the total value of capital importation into the country declined drastically, standing at about $1.069 million in the fourth quarter of 2020. This represents a decline of 25.81% compared to the third quarter of 2020 and a decline of 71.87% compared to the fourth quarter of 2019. Meanwhile, the total value of capital importation in 2020 stood at $9.68 million compared to $23.99 million in 2019, representing a decline of 59.65% between the two periods. Now, the largest amount of capital importation by type was received through their other investment, which accounted for 73.22% of total capital importation, followed by foreign direct investment, which accounted for 23.49% of total capital imported, and portfolio investment, which accounted for 2.39% of total capital imported in the fourth quarter of 2020. By sector, capital importation by shares dominated in the fourth quarter of 2020, reaching $287.4 million of the total capital importation in the fourth quarter. And the National Bureau of Statistics also announced the commencement of the process of rebasing Nigeria's GDP in collaboration with the World Bank. In its bid to rebase Nigeria's GDP, it announced that it had completed the listing of establishments, a component of the National Business Sample Census. Nigeria's GDP was last rebased in April 2014. At the time, the overall estimate of the economy size increased significantly by 89%, as the estimate of Nigeria's total GDP rose from 42.2 trillion naira to 80.2 trillion naira. And data from the Nigerian Communications Commission shows that Nigeria's mobile internet subscribers declined by 563,837 in December 2020, with a total number of internet users dropping to 153.87 million from 154.43 million in November 2020. Meanwhile, broadband subscriptions declined by 0.12% from 86 million in November 2020 to 85.9 million in December 2020. In the meantime, the U.S. has given its formal backing to Nigeria's former Finance Minister, Dr. Ngozi Okonjo-Iweala, to lead the World Trade Organization, removing the final obstacle to her bid to be the first woman and the first African to run the Geneva-based trade body. With the U.S. now joining a consensus, WTO General Counsel Chairman David Walker is expected to soon announce a meeting in Geneva where the organization's members will formally approve Okonjo-Iweala's appointment to a 4-year term as Director General.
Yeah. And last week, the Central Bank of Nigeria directed banks and other financial institutions to immediately close any accounts dealing in cryptocurrency or facilitating payment for cryptocurrency exchange with immediate effect. That created a buzz and criticism on social media amongst analyst communities. In spite of that, the central bank says there is no going back on its directives on the use of cryptocurrencies in the country. In a statement, the bank says it will continue to do all within its regulatory powers to educate Nigerians to desist from the use of cryptocurrencies. Listing various reasons for its actions, the central bank said not only are cryptocurrencies issued by unregulated and unlicensed entities, the patrons and users value anonymity, obscurity, and concealment, and there are risks of loss of investment, money laundering, terrorism financing, illicit fund flows, and criminal activities. The CBN also notes that several countries, including China, Canada, Taiwan, Indonesia, Algeria, Egypt, Morocco, Bolivia, and Saudi Arabia have all placed certain level of restrictions on financial institutions facilitating cryptocurrency transactions.
But then here is what a former deputy governor of the central bank, Professor Kingsley Moghalu, has to say concerning this directive. Professor Moghalu says the CBN should have looked at ways of managing the risks rather than outright order disallowing banks to trade in the currencies. Let's take a listen.
$500 million worth of Bitcoin has been traded in Nigeria within the last 5 years. Nigeria is one of the top 10 countries in the use of cryptocurrencies in the world today. In fact, it comes in at number 8 after countries like Ukraine, Russia, South Africa, Kenya, and so on. So it's becoming a real factor in our financial system or investment ecosystem. And this is livelihoods from Nigerians. So when you take actions that look as if you are taking away opportunities from Nigerians, especially in a depressed economy. Also, one of the things that attracts Nigerians a lot to cryptocurrencies is because the central bank, and I've said this, a lot of the policy making that has come out from the bank in recent years has been a bit, ad hoc and, changes from today to tomorrow and so on, policies concerning remittances, policies concerning foreign exchange, and so on and so forth. But trading in these cryptocurrencies, for many people, protects them from fluctuations in the value of the naira. Because every fiat money, every currency in the world, over time depreciates in value because of inflation. And this is one of the reasons a lot of people go for cryptocurrencies. They're risky, but they don't have the problem of depreciation because of inflation.
Well, I kind of agree with Professor Mohalo, because remember we were talking to a crypto trader last week, and he did say that it's important for regulators to actually understand the blockchain technology and how it works and be able to regulate it. And last year, the Securities and Exchange Commission actually came out with some kind of guidelines and recognizes that market as securities market, and it's under their purview to actually supervise this market. So one would not wonder what's happening, is it that these two regulators are disagreeing?
Sometimes, when it comes to new tech, new tech is met with resistance most of the time. So I'm guessing that's what we're experiencing right now.
But I think it's time for them to begin to understand.
Yeah, exactly. But on the global oil market scene, Brent had a weekly growth of 6.53% last week. And this morning, oil prices rose on Monday. The Brent futures are nearing $60 a barrel, boosted by supply cuts among key producers and hoped for further U.S. economic stimulus measures to boost demand. Brent crude for April touched a high of $59.95 a barrel and was at $59.85, up 51 cents from a month of prices last hit $60 in February 2020. U.S. West Texas Intermediate crude futures advanced 54 cents to $57.39 a barrel, the highest since January last year. Meanwhile, Saudi Arabia's pledge of extra supply cuts in February and March on the back of reductions by other members of the Organization of Petroleum Exporting Countries and its allies, including Russia, is helping to balance global markets.
And back here, the Petroleum Industry and Governance Bill is now a subject of public hearing. One of its goals is to increase investment into the sector and improve its overall economic impact. Therefore, it's important to look at the petroleum sector in the context of it as a driver of economic activity and a catalyst of growth. It is known and empirical evidence confirms that Nigeria has more of gas potentials than crude oil. It is because of this that the need to quickly and efficiently harness the gas resources of Nigeria and linking the current discussion to the Master Gas Plan that we will today be interrogating the policy that rules on gas as a major factor of production in Nigeria. Dr. Ayodele Oni, partner Energy Practice Group at Bloomfield Law Practice, joins us next. All right, Dr. Ayodele Oni joins us now. Thank you very much, Dr. Oni, for joining us on the program. Well, first, let's have your view on the PIB that is currently being deliberated on and hopefully will be passed by April, according to the House of Representatives. Are there changes that can be made to the current PIB as presented that can incentivize gas producers to invest?
Well, I think, thank you very much for that question. I think the PIB, as it currently stands, makes it quite attractive to do gas business. One problem we've had in that industry has been the commercial framework. It's been a problem. If you take it back, if you look at it historically, at some point, gas producers were forced to sell gas lesser than the cost of production. Yeah, apart from the fact that the PIB goes ahead to specify pricing, which is the area where I do have a bit of a problem, because I think less is more. Or rather, government provides a framework for developing infrastructure similar to what you got in the gas master plan, which the PIB seeks to follow also, other than stating a price or a pricing regime or a commercial framework, which I'm a bit concerned about. I think it's a generally good law for gas, for investment in gas in the sector.
All right, Dr.
It's better than.
Yeah, so Nigeria depends significantly on gas for power generation, and there are numerous gas-fired power stations in Nigeria. The main feedstock of these turbines is gas, but it's said that gas is not priced efficiently. How critical is pricing of gas in the cost of production for Gencos?
Okay, thank you very much. That's very important. You know, it's an input and an output problem. The ultimate prices for electricity should reflect, amongst other things, gas pricing. That's why, for example, if you look at the multi-year tariff order, which regulates electricity pricing, it specifies that there will be changes every 6 months if there's an increase or decrease in gas price by at least 5%. So it's critical. You cannot generate electricity. I think over 80% of the power plants we have in Nigeria are gas-fired plants. So gas pricing is critical. But if the ultimate price for electricity does not reflect the prices of gas, then there will be a mismatch, and then there will be a problem. And that's part of what we've seen because of the commercial framework. If electricity prices are low and gas prices are high, then electricity prices need to be adjusted to cater to gas pricing. So it's very critical in the entire power space, because without generation, then you.
Okay, just as you've said, it is widely believed that if appropriately priced, the investment in the exploration, gathering and production of gas will increase significantly. Now, what do you think can be done to improve the gas pricing mechanism to make it more reflective of market conditions?
Okay, I mean, I think you've answered it. I think you should leave it to the market. For me, from a regulatory point of view, I think less is more for me. I think government should provide a framework to develop infrastructure, a framework for distribution, for transportation, similar to what we have with the Nigerian Gas Transportation Network Code now, which allows for access, which allows uniformity in transportation charges. I think government should just continue to incentivize stuff like the import duty exemption certificate. I think that's what government needs to do. Because the issue with regulating pricing is that if you look at the gas sale arrangements, particularly gas sale and aggregation arrangement, where you have the gas aggregator as a mediator, you find out that there's contractually the opportunity to escalate prices annually. So at the end of the day, it defeats government's intent. Government intends to have the prices attractive, but not too high. But because there's an annual escalation, at times even benchmarked against the OECD, it then becomes very expensive. So what government should do, it's a demand and supply thing. As long as, and you cannot even look at gas outside of the economy itself, as long as there isn't sufficient demand in terms of productive activities, industrial activities, you will still have that problem. Because historically, it's been a pricing framework problem, it's been lack of sufficient demand, and it's been an infrastructural problem. Those three have been what the problem is. Now, the market has improved now, because I understand from having conversations and doing transactions. I was speaking to one of my friends, Kunle Williams, who's been quite involved, heavily involved in the sector. And I understand that trade, they do about 1 billion scoff per day trade for gas. So the demand is improving because industrialization is improving in the country. So I would rather leave, I would not prescribe a commercial framework. I would leave it to the market, but I would prescribe framework for supply. I would ensure that there's a supply obligation, which is what government has been doing, particularly under the gas master plan. There's an obligation for every gas producer to reserve a particular quantity for use or sale in the domestic market. So I would rather I'll do less of commercial framework regulation.
Okay.
Otherwise, we have the same problem as power. We have the same problem as domestic petroleum products. So
Okay.
I'll leave it to market forces. Similar to what's done with the Henry Hub and elsewhere.
All right, so if this bill is passed in its current form, how easy will it be to amend it in future when, take for instance, economic circumstances change?
Okay, what the bill seeks to do is to set a framework, and a framework remains a framework. So there'll be the opportunity. Also recall that the bill speaks specifically to domestic gas. Now, when you produce a particular quantity of gas, the commercial framework only relates to that portion you have to reserve for domestic sale. Otherwise, your export project and sale outside that quantity that is reserved for domestic sale isn't governed by any pricing framework. So I don't see that as a problem, generally speaking.
All right, now that we're seeing oil price go up, as of this morning, it's about $60. What implications do you think that would have for us in terms of gas pricing and, of course, looking at the PIB the way it is?
Okay, I wouldn't say it necessarily impacts gas, because gas is dealt with separately. Food is more of a commodity than gas is. You understand? So gas has got its use. Even the country has got more gas, like you rightly mentioned, almost 200 trillion cubic feet of gas, 187 by 2017, and that's increased. We seem to be pushing a gas-centric economic growth. So crude would, of course, generate more revenue for us, but as long as we continue to develop gas projects, everyone's speaking about energy transition, and I think Nigeria is going to reach a bus stop first, which is the gas bus stop, before we reach the renewables destination. So there's a lot of emphasis, similar to what Qatar has done. Like you will be aware that Qatar has pulled out of OPEC and is concentrating more on LNG and its gas sector. So I think whilst we generate more revenue from crude, the gas arrangement is a separate arrangement, particularly when you also consider the Train 7 of the NLNG and all other gas projects currently going on in the country. I think
all right,
not
thank
necessarily.
you. Thank you very much for your time, Dr. Oni. It's a pleasure having you on the program.
Thank you.
Enjoy the rest of the day.
Thank you very much for having me.
Okay, the latest decision on cryptocurrency market remains a major topic of discussion, and the president of the Stakeholders in Blockchain Technology Association of Nigeria, Mr. Senator Iyayan, joins us next. The central bank's directive to the banks to expose any individual and entity running cryptocurrency accounts is not going down well with a lot of people in the business community. Cryptocurrencies have gained popularity since Bitcoin, the most valuable crypto, rose significantly 4 years ago. The coin went from $900 in January 2017 to almost $20,000 by the end of that year. And as at beginning of this year, traded at about $40,000. And looks like cryptocurrency trading might just be the trend globally going forward. And so one wonders why the central bank has to come up with the rules at this time. And it's also important for us to understand what this market is all about and the need for regulators to find a way to regulate it rather than prohibit it. And we are starting off this conversation with Senator Iyayan, the president of the Stakeholders in Blockchain Technology Association of Nigeria. Thank you very much, Senator, for joining us on the program. Good morning.
My pleasure.
So first, let us understand the relationship between blockchain technology and cryptocurrency.
Thank you very much. There is usually this confusion between blockchain and cryptocurrency, and sometimes blockchain and Bitcoin. They are not the same. Blockchain is a technology. It is an innovation that we call a distributed ledger technology, a trustless technology that enables you have the ability to store, transfer, or even move anything of value, not only cryptocurrency or currency. You can move anything on the blockchain, anything of value at all, whether it's your digital identities, your electronic votes, it could be your intangible assets, such as intellectual property. It could even be your other assets, such as shares and stock and all of that. So blockchain is the technology enabling cryptocurrencies. Cryptocurrencies is just one of the applications of the blockchain. Cryptocurrencies evolved, especially after Satoshi Nakamoto, a person or group, invented the Bitcoin. The Bitcoin is the first experiment with the cryptocurrencies. And the idea of cryptocurrencies is to have a decentralized currency that enables smarter ways of transferring or storing money in a digital economy. So cryptocurrencies are optimized for the digital economy, which is the economy we are in right now. And to understand better how blockchains really work, you need to think right back to the days of the internet, back in 1991. When the internet came up, there was a lot of, it struggled with the same resistance as we're having today. Some people call it, it's fraudulent, it's going to be the end of the world, it's 666. But today, we all use the internet. Even the central bank can't do without that internet. And this is what it is. The blockchain is what you call the second generation internet. It is just the next level of the internet. The first level of the internet is the internet of communication, making this communication between us right now happen, possible. You talk about emails and you talk about all the social media communications, talk about Zoom meetings and Google Meets. That's the first generation of the internet. The blockchain is the second generation of the internet. What does it do? It is the internet of value. It is the internet that enables you not just communicate this time, like the first generation of the internet, but the one that allows you to create value and be able to transfer and store value in a secure, transparent, traceable manner. This is the first time in the history of man that you have a technology that is called trustless. Trustless, not because it writes itself, but trustless because it is based on computational algorithms. What I mean by that is, rather than relying on the intermediary or on the third parties, as we have been doing for centuries, and still have a lot of problems and frictions from the financial industry to the pharmaceutical industry, to the oil and gas industry. Mention them. We have frictions everywhere. We don't have enough efficiency in our system. There is no trust in our system.
All right,
about
Senator.
any industry. From the media, anywhere, there is no trust.
All right, Senator. Some have argued that the blockchain takes away the middleman. But with Bitcoin, you still have miners. Are the miners not the middlemen in the transaction?
All right. When we talk about blockchain as removing the middleman, the idea is this, depending on the blockchain you're looking at. For centuries, we have had two parties who want to go into a contract or transaction. Have had to rely big time on the middleman or on the third party. And usually this is because of the lack of trust between the parties. And so because you want to borrow trust, to use that word, you put a middleman in there. This middleman could be it could be a bank, it could be a lawyer, it could be anything. Now, the idea is this, blockchain disintermediates. What that means is that it brings more transparency, efficiency, and trust in the system by enabling parties go into transactions, not necessarily financial transactions. It could be any transaction at all, without having to rely on the integrity of the middleman.
Okay.
Now,
all right.
idea now is that brings a lot of trust in the system.
Yeah.
When we say blockchain is decentralized, there are different types of blockchain, 3 of them. And this is what we need regulators and policymakers to begin to understand. So when you talk about blockchain, you're looking at a public blockchain, such as the Bitcoin, for instance, which is decentralized, and there is no central authority controlling it. There's no CEO of the Bitcoin. There's no company in New York where the headquarters is. It is just a technology that is open source and decentralized.
Senator, talking about
private blockchains.
Yeah.
A lot of companies in the private sector today use private blockchains. The purpose of that, what does that do? It means that you can still have some level of control from the central, as a central validator, all right? So that you don't lose control to all of the nodes or computer systems forming the entire ecosystem or the consensus system. So
all right, Senator.
Next one is what you call the confederal one, which is an hybrid of the decentralized and decentralized.
Okay.
Now, idea why I've explained this is that we understand the implications. When we talk about Bitcoin, for instance, it's decentralized, and I understand that there are concerns about this ability of the blockchain to remove middlemen and third parties and all of that. But this is for efficiency. It doesn't mean the end of the world.
All right, Senator.
That we have to learn new
Senator,
ways
can you hear me? So the central bank argues that cryptocurrency trading is an avenue for money laundering and financing of terrorism. What's your reaction to that?
Thank you very much. As industry stakeholders, we are very responsible citizens of this country. For those who are involved in crypto trading, at least within our own regulated, self-regulated community, because we have associations, we realize that there are threats and risks that are often associated or typically associated with cryptocurrencies. And this is because of the nature or the characteristics of cryptocurrencies being decentralized, bringing in a lot of anonymity and pseudonymity. This is what traditional systems, law enforcement, banks, regulators, policymakers have concerns about. Now, we acknowledge that susceptibility to fraud and all of that. But that is only just one part of the story. What we need to understand is that in every system, there's always that vulnerability or susceptibility to fraud. Not because the technology itself is fraudulent, not because the thing is fraudulent, but because the actors that apply or use these technologies are fraudulent. So that brings me to look at the fiat system. The fiat system, is it undeniable that for centuries since the fiat system has been operated, we do not have a massive level of terrorism going through fiat systems? Is it not true that we have massive money laundering going on in the world? If you compare the amount or volume of money laundering, fraud, and scams going on in the fiat system, and you compare that to that going on in the cryptocurrency system, it is so large. So what I'm saying is, cryptocurrency is just about, Bitcoin is just about 13 years old. Fiat systems have been on for centuries, and we are still battling with all of those fraudulent scam and terrorism issues. So that brings us to the table. What are the good? Rather than focusing on just the bad, as we do cryptocurrencies, there are good things about cryptocurrencies. When we look at cryptocurrencies, they bring speed, they bring efficiency, they bring trust in the system, they bring they bring in an optimized and smarter way of participating in the global digital economy that is data-driven. The fiat system as we have it today, it belongs to the old system when the world was yet to transform or transit into a digital economy. If you look at the Bitcoin white paper by Satoshi, you will find right in the introduction, the idea is about enabling commerce. The idea is about doing things in a more efficient and smarter manner. I mean, if I wanted to send money to any country, to even Ghana, right here beside me, you know how long it takes, you know how much time it takes as well. All that can be done away with when you leverage on a technology like the blockchain, Now,
Okay.
and
All right,
this is
Senator.
what I want to say about scams, and this is very important.
Senator,
It is not,
let me come in here. We really don't have much time, okay? Now, the idea of digital currencies that central banks have no control of is seen as a threat, to conducting monetary policy. How would you, as an association dealing in blockchain technology, work with these regulators to better understand this market and find a way of regulating it rather than prohibiting it? I remember SEC last year came up with some kind of guidelines to look at how to regulate this market. And then having the central bank come up with this other regulation or prohibition, one wonders. So how do we move from here?
Thank you very much. Regulators need to come from an informed and more knowledge-based platform to be able to provide the answer that is needed in this age. The issue with regulatory matters, especially when it has to do with cryptocurrency, is that usually the knowledge base is not quite enhanced. When we understand this technology, if you go to other jurisdictions, such as from the US, the UK, the entire Europe, countries are investing massively in education and research into blockchain technology. It's all about a risk-based approach. Now, if you look at even the central bank understands, I believe, that when it comes to risk such as that provided by cryptocurrency, it is not a matter of banning. It is a matter of regulation. And in other countries around the world, the practice is not to ban. The practice is to understand the technology, understand the strengths, weaknesses, the threats and opportunities, and try to maximize those opportunities and minimize the threats. How do you do that?
All right.
We already the traditional banking system.
Well, Senator, I think you've already made your point. Hello.
AML and KYC regulations. All
Senator,
we have to do optimize that for the cryptocurrency space rather than banning.
All right, Senator. It's not okay. You've made your point, and I guess this conversation, of course, I'm sure will continue at least for the rest of this week because a lot of youths out there on the internet are not finding this funny. Okay, so we're going to be getting views from different quarters on this particular issue. And thank you very much for your time. And please, when we call you again, do answer us.
You're welcome. Thank you.
Okay, from crypto market, let's move to the equities market. And Eddie has all the details. Eddie, well, last week was all bearish. Wondering how this week is going to look like.
Well, Jimmy, I'm also wondering with you, if I had a crystal ball, I would be happy to tell you what the market holds for us this week. But since I don't, we'll be talking to Charles Fakuga, the CEO of Super Commercial Trust, just to have an idea of what to expect in the market this week. Good morning, Mr. Fakuga. Thank you for joining us on the program.
Good morning. Thank you for having me.
Well, just like Chimize pointed out, last week the market was bearish all through. With all those declines we've seen in the market, what should we be expecting this week?
Well, like the market has already opened, the market is quiet. Traders and investors are very cautious. I see what will happen today and the rest of the week. The market is likely, the bulls are likely to take over a little bit cautiously, but we'll see occasional down market and up market, but towards the end of the week, we will see the bulls taking control.
All right, Mr. Fakuga, thank you. We'll look forward to that. Do enjoy the rest of your day. Charles Fakuga is the CEO of Super Commercial Trust. Well, the market was negative all through. We had 5 negative trading sessions, and so the index fell 1.66% at the end of the week to 41,709.09 points, while the equity cap was at 21.819 trillion naira. Now, although the market was mostly negative, we saw higher turnover of volume traded week on week as volume rose by about 7% to 2.76 billion naira, while value was also higher at 29.68 billion naira. We had 31,380 deals all through the week. Now, sectoral performance was negative. We had declines from all the sectors. The banking sector was down 2.28%. We also saw about a 4% decline from Zenith Bank last week, ETI, and some of the tier 1 banks. Consumer goods was down 3.22%. That was largely driven by declines on Nestle. Industrial goods was down 2.07%, and that was due to the huge declines we saw on WAPCO last week. And then towards the end of the trading week, we saw a 2% decline from Dangote Cement. So the industrial goods sector declined on that end. Insurance was down 6.01%, while oil and gas declined 0.16%. Now, the unlisted securities market was also negative, but on a marginal note, as it declined 0.01% week on week to 725.29 points, while the market cap was at 520.41 billion naira. We saw about 1.11 million units worth 26.88 million naira traded in 31 deals. The bond market reversed its bearish trend last week as we saw bullish sentiment all through the week, with yields declining. But towards the end of the trading week, we saw that reverse as well. So the yields on the bond market declined week on week, although marginally. On Friday, we had 20 deals worth 13.84 billion naira. But to talk more about the fixed income market, we have Ladi Bello, a fixed income dealer at Access Bank. Good morning, Ladi. Thank you for joining us on the show.
Good morning.
Well, I'd just like to get your outlook for the fixed income market this week. What should we be expecting?
Okay. Well, last week we had a relatively interesting week with the hike in OMO rates. So we witnessed OMO bills, the OMO auction, closing at around 10% handle. So the hike in the OMO rates triggered a bit of some mixed sentiment in the market. We saw some buyers try to take advantage of the attractive yields, while some sellers try to take a bit of profit on some of their OMO winnings. So going into this week, we expect these mixed sentiments to continue. We expect OMO bills to keep trading at an elevated level. Well, specifically when speaking on the opposite side of the curve, the bond curve, which has longer duration on the maturities, we expect to see the hiking rates filter into the secondary market as well. We've seen some of the shorter-term maturities already last week on Friday's close, trading at around 10% as well. So we expect to see some of the other long-dated maturities from the 2035, which is being reopened at the bond auction, as well as some of the other far-dated instruments, the 2049s and 2050s, trading at that sub-11% handle.
All right, Ladi. Okay, Ladi, I apologize. We've run out of time, but, we'll talk more about these markets as the week goes by. Thank you for your input on the program. Ochimeze, well, it's the beginning of the week. We don't know how the rest of the week will play out, but we hope everything, turns out positive at the end of the week.
Yeah, we can only remain optimistic. So let's do a quick break, and then when we come back, we check in with Juliana. All right, let's do an opening call to London, and we have Juliana there. Hello, Juliana. Good morning. Good to see you. A beautiful week. Anyway, the price of oil recovered to its pre-pandemic levels, having hit an all-time low last year. That's what we're seeing this morning. So how is this filtering into oil-related stocks this morning?
Good morning, Chimese, from a very snowy London. It's been snowing over the past 24 hours here, so it's pretty cold here today. But we haven't had a cold start to the FTSE. The FTSE All-Share has actually opened up in positive territory, even though during the Asian overnight trading hours we saw Brent crude rise to $60 per barrel, the first time we've seen it since January last year. Didn't really manifest on the FTSE. Royal Dutch Shell, they opened 0.37% lower, and BP opened just under 1% higher. Brent crude doing pretty well. Lots of analysts are suggesting that this is because there's a huge demand in China. Of course, as well, Saudi, the world's largest oil producer, has pledged to cut production significantly during this month and next month. And of course, we've got that vaccine rollout. Some of the biggest rises on the FTSE this morning are JD Sports, the retailer, they're up 7%. Whitbread, the hotel owner, they're up 5.13% at early trading.
And Tesco has called for a 1% sales tax to be levied on online competitors like Amazon. Why is Tesco making this call?
It's an interesting story. This is part of a wider discussion about rent rates relief here in the UK. The biggest retailers, since the pandemic started, haven't been paying any rent rates. And this has been a topic of ongoing discussion about the high street and whether or not, with the increase in footfall, they can, continue paying this and remain profitable. 18 top chief execs, including the bosses of the big four supermarkets, did write to Chancellor Rishi Sunak, basically saying that he needs to look at whether or not they should be bringing back rates in April. And Tesco went a little bit further. They said it's not fair that the likes of Amazon and other tech giants are making so much money, eye-watering sums of money, and are not paying their fair due. An example of that is during the year 2020, Amazon made £19.3 billion worth of sales, 50% more than what they made in 2019, but they're only paying 0.37% worth of tax. Amazon will argue that they're doing so much more by recruiting tens of thousands of workers in the UK, but the Tesco boss wants them to pay an online tax of 1%. Again, an ongoing discussion that's much more wider than what the Tesco boss has written to the Chancellor saying.
And aside from the GDP data expected this week, what else should we be looking out for in the week?
Well, I've got to tell you, the GDP data is really all what people will be looking for here in the UK. That's due on Friday. All signs suggesting we're heading for a double dip recession. But there is some other data. We are expecting Ocado, the online delivery supermarket, to announce their results, I believe, on Thursday. They did last year a £750 million deal with M&S. Of course, we know lots of people have been eating a lot, shopping online, so we're expecting to see good results from them. We're also expecting results from the pharmaceutical giant AstraZeneca. This is the first time they're going to be posting results since they won the vaccine race war. So lots of people will see just how much and how significant a boost has been because of the pandemic. We're also expecting to see results from Twitter. Twitter results are coming on Tuesday, and some retail results from Ted Baker on Thursday. So a pretty busy corporate week for the FTSE All-Share, Chime.
And our business is to keep a tab on them, and that we will do. I'll talk to you later in the day, Juliana.
Absolutely.
And okay, let's move to the crypto market now to see how the numbers are doing. Laddie, you're there. Well, just wondering how crypto traders are taking this new directive from the central bank.
Well, the market is still quite bullish because in the past, when China used to crack down on cryptocurrency, you would see the market would dump seriously. But you see, after the directive, the market cap is still up $1.192 trillion, 24-hour volume, $167.38 billion. BTC dominance went down a bit, about 60.97%. The price of Bitcoin touched $40,000 over the weekend, but in early trade today, it's trading at $39,075, up about 1.42%. 24-hour volume stands at $64.401 billion. And look at the top gainers. We have Elrond there. Elrond up 47% in early trade. Elrond, that's one of the IEOs on Binance. Matic, too, up 46%. And now I'll be talking to Gaius Chibueze. Okay, when Gaius comes on, we'll talk about it more. The IEOs seem to be going up at this point. I'm wondering if we're going to have some kind of mini IEO season, because Matic is also up 46%. Dogecoin still keeps going up 23% in early trade. And looking at the news today, I saw Elon Musk talking about cryptos being the future of currency on the earth. And you know, when Elon Musk sneezes, the crypto market reacts. So we see Doge there still moving, and he's still preaching about Doge. So let's talk to Gaius now. Hello, Gaius.
Yes, thank you so much, Mr. Williams. Good morning.
Great to have you, Gaius. I was telling Chimi a moment ago that the market didn't really react to the directive by CBN.
Yes. Like, you remember what I told you last time?
Yeah.
The crypto market has actually gone past where any government, anything from any negative news from a government can actually control the market to an extent.
Yeah.
It's now controlled mostly by news of tech influencers.
Yeah. So the CBN has said that crypto has been used for illegal activities, and Yahoo boys have been using it to send funds into the country. What's your reaction to that?
Well, I think they are actually ill-informed, and they don't have their facts right. Looking at the type of corruption that exists in Nigeria, where the politicians themselves move funds abroad, funds that are meant for projects. I think as related to crypto, the Yahoo boys are not actually doing much with crypto, like what the politicians have done with public funds. So I think their reason for banning crypto as a result of illegal movement of funds by Yahoo boys is actually not a justifiable reason. Looking at the fact that all over the world, governments of the world are beginning to take their time to understand what is in for them in the cryptocurrency space. In fact, in some states in the United States right now, they tax people that hold Bitcoin. They tax you on your gains on Bitcoin. So let's say your Bitcoin is $30,000 and the price moves to $40,000 and you decide to convert to fiat. The government has something out of that $10,000 profit that you have made. So what I'm expecting them to do is to call stakeholders in the crypto and blockchain space together and see how both the government and the stakeholders can work together to set a framework for cryptocurrency in Africa, and not to come outright and say because of few Yahoo boys or whoever is using it for something illegal, they want to ban the entire industry that is the future.
Anyway, guys, because of time, we've run out of time now, so the conversation continues anyway. But I see Elrond and Matic are up this morning. Is it IEO season?
Yes, you know the market has supercharged, so I think it's that season again for us.
All right, no problem. Thank you so much, Gaius. Thank you for coming on the show as always.
Thank you so much, Mr. William.
Thank you. All right, Chimi, there you have it.
Well, I guess I still need to understand this IEO season, the alt season, and all of that.
Yes.
And while we do that, perhaps the CBN may just have to see a way to balance some of these things.
Exactly.
And we'll continue to talk about that. Thank you. Well, that's it on the program. Thank you for watching. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thank you for watching.